But let's actually kickstart the show by talking about one such corporate. GNA Axles reported weak Q1 numbers. The company's revenue was under pressure. This after they posted a very strong showing in Q4. Both the margin and EBITDA saw a little change if you look at it on a year-over-year basis. And the board of GNA Axles has also recommended a 1:1 bonus issue. Mr. Ranbir Singh, MD and CEO at GNA Axles, joins us now to take the conversation forward to tell us where things could really be headed from here on. Mr. Singh, thank you very much for joining us today. This is Pavitra. I have to begin by asking you about the kind of growth that you've seen in this quarter, because it has come under significant pressure, specifically after the kind of solid growth we saw in Q4. I think in Q4 your revenue was up around 27%. Can you tell us what went wrong this quarter? Are there certain pockets where you're seeing higher pressure? Mr. Singh, I think you're on mute.
Pavitra, so much thanks for inviting me today morning. Our Q1 results are, top line has not grown this year, and it is just matching with the Q4 last year or even Q1 last year's. But bottom line, some improvement is there in the bottom line. EBITDA has improved by 17%, and profit PAT has also improved by 23%. So far, top line is concerned, as you see in tractors, off-highway, we are having over 70% business share of our components. So tractor market, unfortunately, they have done 9% less production in Q1, and they were able to sell less by 5.3% in domestic market. And apart from that, all off-highway market, tractor market, they were continuing. They were at end of the March, they were having heavy inventories of the components. So they have done correction in their buying in first quarter. This is one reason. Because of that, our top line has affected. And if we talk about the CV market, CV initially their guidance was to improve by 30% in India, but in Q1 unfortunately they are down by 3%. So we our high dependency on CV tractors, so our top line has not grown.
Okay, Mr. Singh, hi, good morning. But what's the sense that you get? Is it a seasonality factor? Maybe just Q1. Now we're already more than halfway into the second quarter as well. What are the trends that you're seeing around now? Of course, we've also had a period of unprecedented rainfall, at least in a lot of the local markets. Not sure if that could perhaps impact your Q2 numbers. But what's the outlook both on CV and tractors?
Q2 CV, they have given us good guidance. They are going to produce more vehicles in Q2. Apart from that, regarding the North America, initially their announcement was that they were predicting this quarter to reduce the production of Class 8 vehicles, but it is not happening, and it is going normal. And we are hopeful in Q2 we will be able to perform equivalent to last year, because our last year Q2 was highest.
Okay, so can you put some numbers to that? Though the year has started off on a sluggish note, but if we talk about top line growth, how much would you still expect in terms of an overall growth? And if you could just break that down, will the bulk of it continue to be from the North American market, or are you expecting your local business to also pick up?
Local business CV will pick up in Q2, Q3, and it is too early to predict the overall growth. Even last year in the beginning, our target was our anticipation estimation was 10% growth, but we have closed with 24% overall top line growth. But this year also, as per the present scenario, our growth will fall between 6 to 8%.
Okay, so FY24 top line growth 6 to 8%. So you spoke about how in the trucks business, the off-highway trucks, there is a lot of inventory which got corrected in Q1. Could you elaborate a little bit more? How much more inventory are your clients, suppliers sitting on, which needs to be normalized?
Everything will be settled down in second half of this year, but in Q2 they will produce better than Q1. That's the outlook for Q2.
Okay, so the inventory has run off completely. The excess inventory.
But it is very difficult to correct 100% inventory. But according to sales, they take some correction.
Okay, got that. Mr. Singh, let's also talk about your margins now, because we were looking at the past data. For around 4 years, you've stayed in that 14 to 16% kind of margin band. Do you expect to stay in this range? Do you think you can, do better? Because now you're already at 15.8.
This time, some softness is there in the steel prices. So that's why our EBITDA has shown some improvement. But we are continuously trying to improve further with the cross-functional and internal teams to cut down the cost. But our product is like that is a more steel intensive, which is the outer limit is 15 to 16, maximum 17% in our components.
Mr. Singh, what is the capacity utilization level that you are operating at, and will there be any fresh capex this year or any capex that gets completed and comes on stream?
Actually, in 3 years, we have planned overall capex that includes on working capital also we have to invest a lot because of export. Overall cycle is 6 months, 5 to 6 months recovery of the payments. So our total target was 200 to 300 crores investment. Out of that was for 3 years. And even last year, long-term capex we have done on plant upgradation and the capacity enhancement was 75 crores. So this year also we are investing more than 70 to 80 crores for capacity enhancement and modernization.
So we leave the conversation here, out of time. Thank you very much for joining in, and hope Q2 is a stronger quarter for you. That's GNA Axles guiding for a 6 to 8% top line growth. Expect to pick up in the second half as things normalize.